Market Technicals morning call video for Monday, July 23rd. Hope everybody had a great weekend. Back to the markets on Monday. Sunday night, we had risk off again. We've had some follow through from Friday. Markets actually ended opening up down 3, down 4, and as we speak, we're down about 14.5 handles. So in the mini, so risk off for the day. It's going to be interesting to see if we're going to get some sort of a bounce here. So we're not oversold. We'll get into the charts in a moment. But the last 2 weeks it's really been quite odd, right? We had markets up straight up for the last 2 weeks, and now the markets have rolled and gave back a lot of its gains on Friday. And we're going to see if this sell-off is going to hold for today. We're in basically the heart of earnings season, and that's why I had mentioned that if anybody was swing trading to put some hedges on, it's a perfect time. We're at these lofty levels with low volume, and markets we're showing major cracks in the wall, which we've been talking about for the last couple of weeks. Is finally coming to fruition, and now we're going to want to see how the markets are going to digest this pullback. Is it a pullback? Is it the start of a new downtrend? Nobody knows yet. We're going to need to see how this market reacts to price action, and so I would really be cautious here. I've been mentioning it. Really be cautious. That doesn't mean that we can't take longs for the day, intraday. But I would definitely be conservative. There's no question, no reason to put additional risk for the day. Reduce the share size, and like I said, pick the best trade setups that you see during the course of the trading day. Again, if you're day trading, if you're swing trading, no reason to take too many positions. I probably looked at over 1,000 charts over the weekend, and nothing really fantastic grabbed at me. And again, guys, that doesn't mean that we can't make money in this market. We just need to really be conservative. When it really gets good, then you can really throw them on the sides. All right, but I want to get into a lot of charts here. I have some charts, a lot of stuff that we go through, and I want to go through our indicators. And I also did our ratio charts again to show how much divergence we have here. And here's our 10-minute chart. And as you can see, I put this rising wedge. Sure enough, we closed right at the lower trend line of the rising wedge on Thursday. We gapped lower on Friday and never saw that open, so we never filled this little gap area here. So we're coming into this area of support, which was resistance. As you mentioned, we mentioned the last couple of weeks, we had this range-bound trade in the S&P. The spiders, 5 handles. 5 points. So we're going to see if this is going to hold and maybe fill the gap and then move lower. So that's something that I'm going to be watching during the course of the next couple of trading days. So I'd like to get into our indicators here, our trusty indicators. And as you know, the NYMO, really great indicator, really wasn't giving us much here. But now that we've sold off, we're down 131 right here up in this area. That means that there's plenty of room to the downside before we really get oversold. So that is a concern for the bulls if you are a bull. VIX hasn't even gotten started yet. And as you can see here in his bullish fallen wedge, we're still in that Bollinger Band area. So if this VIX can hold here and start to move and break above this area here, then you're going to have additional selling pressure in the market. So that's something to really take note of. We need to watch closely. Bullish percent, S&P. This reading is overbought, as you know. I mentioned this on Friday. I also said the 50-day, the S&P above the 50-day moving average, way overbought. So a lot of our indicators are overbought and telling us to be very, very cautious here. Also, put call. Now, as you can see, when we had that hook lower, when you get that extreme complacency, it's just a matter of time before it catches up, and you need one little event, and that's what's happening right now. And look what's happening here. Big spike up in the put call. Once you get that curl over, you usually get a follow-through sell-off in the market. Okay. Now, I want to get into some interesting charts here. Take a look at this. S&P 500 is the TNX. I did show you this before. But if we have, as you can see, we broke resistance. We sold off a little bit, held support. You're not going to be able to really continue this. If this thing really breaks down here, and this is something that really to look at, I think we're going to have an additional selling coming into markets. Extremely low yields while the S&P continues to push higher. So that's telling us low yields, money's running into bonds, right? It can't be in both. So eventually this is going to catch up and play catch up. Or it could be, believe it or not, vice versa. But this is something here that's very concerning. And I mentioned that before when I showed you the 30-year bonds. So I want to run into these ratio charts now again. Transports, leader of the sectors, right? Now, we have the S&P ratio chart of transportation, running up while the transports are rolling over, not good. So this is major divergence here in the markets. Let's talk about the small caps. Small caps, same thing. S&P running up, small caps not making new highs. S&P did make a new high up here, and we didn't even get close to it. I'm sorry, this is copper, guys. Apologize. This is copper. Big divergence here in the copper and the S&P. As you know, it's a big industrial metal, and you can't have copper rolling over while S&P. Usually, copper is a big leader. Copper will lead the S&P. So that's another indication that something's wrong here. Semiconductors, okay, they've been decimated here. As you can see, the last 7 trading days prior, we did get that oversold bounce, and now we're rolling over. So, telling me unsustainable. S&P rolling up here, and copper. S&P semiconductors rolling back over. Not good. Another one, the BKX. As you know, the bank sector has been having troubles, and now we have our rollover. Banks that the BKX rolling over, and the S&P really just kind of rising up higher here, taking out the highs, and we just kind of double top in this area. So not good. Lot of divergence in the marketplace here, and it looks like it's starting to pan out to the downside. Additional, dollar is king. The dollar is king right now, guys. And as you can see, we had a bullish bull flag here, right? Held support. We rallied up to this upper area here, double top. Now we rolled back for the last 5-6 days, which helped the market, and now we're starting to break higher. A breakout above here will start to get us to the 88 area, and I showed you that chart for the longer-term chart. If that does happen and all these divergences start to play out, you're going to get a decent sell-off, and it would not surprise me to get down to that 1260 in the S&P cash, SPX. So that's something that we would monitor, and then we need to reevaluate when we get down there, okay? Nothing goes straight down, but I just wanted to let you know something to really be cautioned about. And if you're playing swing trading, I hope a lot of guys put a lot of hedges on, like I indicated on Thursday and Friday. Okay, now I also brought this up here, the S&P 500 daily chart. And as you can see, this big rising wedge, we've been rising up for quite some time. And I did say that I put this Fibonacci retracement to 61.8, 76.4%. Ideal areas for pullbacks. And we did get above it. We didn't get quite to the 76, but we started to roll back again. Now, we do have an engulfing candle on Friday. Now, we are down right now this morning. I mean, really anything can happen, guys. So usually these large candles, they usually kind of try to back test, retrace here a little bit, and then start to roll again. Now, this rising wedge pattern is not going to really, ideally, it's not going to trigger until it breaks a lower trend line. Okay, and usually something like this, you'd like a break and then back test and then roll again. But 1267 right here, 1260-ish area is probably going to be the ideal target if this pullback starts to really materialize. Okay, Qs, big cap tech, as you can see, big engulfing. Fill that long little gap area here. So we're again still above the 20 and the 50 and the 200, but that could change quite quickly. Okay, guys, spiders. Like to see volume, big distribution candle, and if you can see, what's the pattern here? Every time there's a distribution day, it's much greater than a regular accumulation day. So this is something that's really concerning as well. But again, above the 20, 50, and the 200, still constructive, but showing signs of momentum waning here. Now this is something that's really disturbing, and I mentioned the transportation sector. I did show you that ratio. But look at this, when I had these arrows, couldn't break this area here. We broke back above it, failed miserably. Now look at this. Today, we're going to break the 200. This is very, very scary if you're a bull. Okay, this is not what you want to see, a leading sector starting to deteriorate and really start to break down here. And if we start breaking down, as today, if we lose this 200 day, a lot of fund managers will be looking to sell stocks. No question about it. IWM's Russell, big gauge of risk. Same thing, guys. If Russell can't manage to rally along with the transportation sector, risk is going to be clearly off, and people are going to be selling risk. Okay, last one, Dow Jones, which is the diamonds. Look at this big distribution candle. Again, not good. Now, you know, if we're all healthy in this market, you wouldn't be looking at all of this. So I wouldn't put the case that we have all this divergence. Everything should be in tune. Everything should be in sync, and we're all moving higher, but we're not. So the S&P's pushing higher thanks to the Fed. and everything else is starting to roll, and we're seeing some major cracks in here. So we're going to look to see what happens this week. It's going to be interesting. We're in the heart of earnings season, so just please keep your heads up. Watch and look for stocks that if you are trading and you're going to be holding, you wouldn't want to be holding into earnings, okay? All right, guys, have a great day. I hope everybody had a great weekend again, and we will see you tomorrow morning. Take care.